smart money on the chart and identify fair value gaps, liquidity areas, and optimal trading opportunities. So here, if the price makes a deep correction mitigating the fair value gap area and grabbing the liquidity under these equal lows, we will have a perfect trading opportunity to go long. Now, when should we buy this pair? We know this move is a short-term downtrend in the lower time frames, so we will zoom into the lower time frame to look for reversal and trade entry. In the third step, we will wait for a change of character to confirm that the short-term downtrend is over and the market can continue pushing upward. We will use two entry setups to open positions. Number 1, if the change of character creates fair value gaps, we will place our buy limit a spread size above the order block. Number 2, if we have no gaps, we will use the retracement levels and enter positions in the middle of the 618 and 786 levels. Stops will be below the swing low and we can use multiple trade management strategies. Here's the checklist and important information about this trading plan we will use. You can risk 2 to 3% of your capital per trade and only have up to 3 open trades. But remember, before using this strategy with real money, you should backtest it on the past data to obtain the performance. Backtesting allows you to build the required confidence and prepare for potential risks associated with the trading. But unfortunately, it can be very time-consuming. That's why we use Trader Edge to backtest and keep track of all our trades. Let's suppose we want to backtest a trading setup on the euro-dollar in 1-hour time frame. We will first set up the chart on TradingView and adjust it. Then we will open Trader Edge's backtester and arrange it next to the chart. Here we will input our starting balance and risk per trade, which we've set to 2%. You can change this to any value you prefer, whether in dollars or percentages, for each individual trade. Once we're done with the backtesting, Trader Edge will provide us with a detailed matrix, including important information such as win rate, maximum drawdown, and profit results. It also allows us to save the data and add more backtests, which will all be stored in the strategy library. If you're interested in using Trader Edge, you can sign up for a 7-day free trial by checking the link in the description. Now, when we began backtesting, we randomly selected a period for the euro-dollar pair. Surprisingly, the first setups yielded a significant amount of profit. So let's walk through the chart step by step to illustrate what was going through our minds during the backtesting process. Here we have euro-dollar on the 4-hour time frame. The market has recently broken below the structure level, signaling a downtrend continuation. So we want to trade with the dominant downtrend. Here we have fair value gaps between the candles and this resistance level, which traditional traders will take as a short opportunity. So lots of liquidity have gathered above it. An optimal trading opportunity would be to wait for the price to mitigate the gap area, grab the liquidity, and look for reversal confirmations on the lower time frames to enter short positions. So we zoom into 15 minutes time frame and wait for the price to make a change of character to confirm the short entry. But as you can see, we have no change of character due to massive bullish pressure, so we won't have any short trades. So let's get back to the 4-hour chart. Here we can see that the price has broken above the recent lower high, indicating that the previous downtrend is no longer valid. Now, regarding market structure, we have a double bottom reversal pattern, with the second leg as a liquidity sweep movement. This strongly confirms that the market sentiment has changed to bullish. Now, we can identify a significant fair value gap on the chart, presenting a potential long trading opportunity. We will patiently wait for the price to return to this gap area, and then zoom into the 15-minute chart to enter long positions. On the 15-minute chart, we can see that the market has made a change of character, signaling that the short-term downtrend is over and the price can continue pushing upwards. This movement has created fair value gaps, so we'll use the first trading model. We'll place a buy order a bit above the order block and set a stop below the recent low. Now, the market has given us another trading opportunity without triggering the first trade. There's a fair value gap and another order block, so we'll place another buy order without canceling the first one. We're still determining what the market will do next, but we will always stick to solid entry rules. In the best case, it will trigger one of the orders and continue pushing up, or it could reverse and cause us to lose both of the trades. Let's wait and see what happens. The price triggered our second trade and hit our target, resulting in a 4% gain. This is because we risked 2% of our capital per trade. Now, we have another order block and a new trading opportunity. So, without canceling the first trade, we'll open another position. Our first target will be twice our risk, and let's track our profits if the price moves in our favor. The close of these candles can be a reliable place to set our higher time frame target, and we will track our profits until we reach here. Let's see what the market does. The market has hit our first target, making us break even. This means that even if the price retraces and triggers our stop, we won't lose any money on the second trade. Every time the market makes a new higher low, we adjust our stop a couple of pips below it to secure our profits. Now this trade turned out to be great and gave us massive profits. But remember, trading live will be much more difficult because you also have to deal with emotions. However, backtesting on past data is the best way to test the trading system and prepare for different trading scenarios. Now these are the results we have got after backtesting this trading plan on the euro-dollar pair for a month. We had taken 16 trades during this period. Although our win rate was 50%, we gained 23% profits. Our profit factor was 2.38, and we only suffered a 4.75% drawdown. But remember, trading on the live account involves real money and real emotions. It's a whole different ballgame compared to paper trading or simulations. The key to success is sticking to your trading plan, which acts as your blueprint for success. So guys, I hope this video provided value to you. If it did, please go ahead and smash the like button to show your support. And if you're new here, consider subscribing to our channel. See you in the next episode.